If you're interested in private lending, you need to know this or it could cost you tens of thousands of dollars. One of the biggest mistakes that I see investors make is to fall under the assumption that just because private lending is secured by a hard asset like real estate, that it's safe. But it's the furthest thing from the truth. Just because there's an asset there, that helps manage the losses you may incur, but it doesn't mean you're not going to lose any money at all. And it's important to know these things to be able to protect yourself. And I think the last one is the most important. First is, what is the exit strategy of the borrower? Because remember that when they're trying to borrow money from you as a private lender, at the end of the day, they want to pay as little interest as possible. So if you're being lured into lending because the returns are good, just remember that the higher the return a borrower is willing to pay usually reflects the higher of the risk of the deal. So what is their exit strategy? Are they planning on selling, refinancing? Is a family member going to get involved? Is it a case of a magic check from the government's going to pay everything out? Like, you want to dig into this and make sure that you believe in what their exit strategy is. If they're looking to refinance with a major bank or lender, what are the obstacles in their way and how are they going to overcome them? Is it reasonable they're going to qualify? These things are really important to make sure that you're protected as an investor, because the last thing you want to do is have a situation where your borrower can't pay you back. Now you have the choice between giving them more time or forcing a foreclosure, and neither option is good. The next important thing that you need to ask is, what is their strategy? What are they doing with the property? And I'll use the example of a flip or a BRRRR, which is a buy, renovate, rent, and refinance. If they're doing some sort of major renovation component to the property, there's a very good chance that the value is actually going to be lowered after they purchase it because they're going to be demolishing the property. Depending on what they're doing and the state of the property, this could make it to the point that in the event of a foreclosure, you would have a major difficult time to sell it. So just make sure you're thinking about these things. Another important one to look at is loan to value. Now, what is the amount of debt you're providing relative to the value of the property? And importantly, how is that value being decided? Is it based off a third-party appraisal? Is it just off of a realtor set of numbers? Is it based on what the ARV or after repair value will be? You need to really be careful there, because who cares what it's worth if they do what they say? What's it worth today when you're lending the money on it? You should be considering what it'll be worth 5 weeks into the project. But all of these things coming together should be how you gauge risk. And one of the things that you need to be aware of is that if you lend on a second mortgage and they default on paying you, the first mortgage holder has to agree to let you foreclose. If they don't, you could be forced to pay out the first mortgage. So if you're lending $50,000 in second position behind a $500,000 first mortgage, do you have the money to pay out that mortgage if they won't budge? You want to be proactive on this. So if you're interested in private lending at all, make sure you do your homework. Full disclosure, I don't help clients lend out money. It's a major source of lawsuits. I'm happy to help clients borrow, but I'm not interested in helping someone lend their retirement savings out to some investor. That doesn't mean, though, that I'm not here to help you. So I'm happy to give you advice, to give you some tips and guidance, but please, please lend carefully. It's by no means risk-free. You can make great money from it. I've done it in the past. It can be very profitable, but please do it cautiously.